Hey traders, Raghee here. Welcome to another episode of Charts and Coffee. Happy Thursday, everybody. We've got some interesting numbers already coming out as we kick off today. Make sure that part of your pit stop, part of your morning routine in terms of before you get started with your trades is checking out the economic calendar. And, for us, I got the retail sales. Initial claims is every week, but that retail sales number, initial claims, created quite a bit of volatility already this morning. Markets were a little bit stronger before that initial claims and retail sales number came out. Both were better than expected. So, there's probably a pretty good justification for the bad news is good news mentality kind of permeating into the market. All right, so let's get to it, gang. Let's dive into your questions. I don't know if you can see her. I got a guest here in the office. Oh, there she is. Yeah, I've got the puppy in the office here today. All right, gang. So let's get into it. Dan, hey, how are you? Yes, at mile 314. So great to see you. Oh, gosh, yes. And thanks for the updates and letting you know how you're doing. For those of you who don't know, Dan's doing a very cool lifelong goal to do the hike and out there on the West Coast and taking a little time off from trading. Good for you. Can't wait to hear the stories when you get back. Hope you are having a wonderful adventure. Great to see you. Oh, that just made my day. All right. So let's see what we have going on here this morning, gang. And as always, you're doing good. Oh, fantastic. Fantastic. All right. So let's go ahead and dive into some questions here. Feel free to type in whatever symbol you might want to take a look at, and we'll dive into it. And let's start off with kind of what kind of mood the markets were in as we wrapped up yesterday. This is a look at the DIA. You can see pre-market, we're sitting up at 339 and about a quarter. We'll see if the market wants to fade that move this morning. I am not anticipating a big fade unless we open also above the previous session high, but I think that we're going to continue to see a lot more strength. Really interesting to see what happened with the Qs. Just keep in mind, gang, when you're talking about structure and when you're talking about the market's behavior, and whether you're looking at the NQ or the QQQ, of all the markets that have been rallying and are in uptrends, NASDAQ is not really, generally speaking, going to be one that I would consider the same kind of strength as what we're seeing in Dow and industrials and transports. But one place that I'm keeping an eye on really closely is I'm getting opportunistics in semis. Just keep an eye on that earnings window. Keep the 642 window into earnings in mind. What do you want to focus on now for earnings setups? 6 to 4 weeks out, so anything that's having earnings this week, case in point, financials, 6 to 4 weeks ago, we were looking for the double green structure of the market, 8, 13, 21, and 34 EMAs indicating bullish uptrending structure. That's where we want to focus our trades as we go into the psychology of earnings. So, keep that in mind in terms of what it is you're focused on. Earnings a few days out, no way. Earnings 6 weeks out, that's when I start my scan. 4 weeks, 6 to 4 weeks, we start looking at where the structure is. 4 to 2 weeks, that's really a great sweet spot for pullback buys, with earnings becoming more and more part of the psychology that will typically keep that trend intact and hopefully moving in the direction of your calls. All right, so let's see here. Let's tackle some questions. And, my pleasure. My pleasure. I enjoy doing this every morning. I absolutely do. All right, Baidu. Sure, let's jump into Baidu. So remember, where is Baidu weighted? What type of sector is it involved in? Is that sector, generally speaking, strong? So you have relative performance within sectors, but then you have the relative performance of the stock within the sector. So I have to say, if I'm going to do anything with Baidu, it would very likely be a bottoming pattern that we're waiting for. We've been talking about this bottoming pattern a lot lately because, well, frankly, this is the way the markets are moving. Yes, that level would be where there could be a break, but I'd be looking equally at potentially that break of the wave, call it 246 as well. But you really need that bottoming pattern to happen here to, as far as I'm concerned, really confirm whether or not Baidu can break the weakness that it's in. Very fresh downtrend with the 8, 13, 21, and 34. Basically, hey, get over here, please. Dog, working with the dog. There she goes. See the dog today? All right, yeah, I got the not so puppy in the office today. Hey, come here, please. Good girl. So that's Baidu. That's what I'm looking at there in Baidu. All right, next up is TAN or TNA. Well, heck, let's look at them both. I've had my eye on solar stocks, and then when everything rolled over in February, you'll notice that solar never really recovered. You are wrecking the joint. Sorry, gang. Oh my gosh, down. So when I look at the way in which this is rolled over, I'm going to need another bottoming pattern here. But by the way, with all-time highs in the broader averages, with strength in the broader averages, what we want to focus on is where is the market strong, not necessarily for those markets that are playing catch up, although that is valuable. And that 1, 2, 3 is a great way to look at it. But we want to focus on first relative outperformers, double green markets, and double green markets and markets that I think would be right now most in sync with the strong sectors, with the broader averages. And then I'll make, decisions about what I would do with a market like a downtrend like TAN. Now, TNA, all right, let's take a look at it's one of those 3X. Okay, so this one's interesting. Now, this is slowly compressing. This is actually really a cool setup. The way that I would look at this is actually because the market is going blue, we're getting these blue grab candles. I would say look for a momentum break. It would probably be as we take out, call it 97.60. And yeah, we have kind of a nice little movement here. Now, you can front run the pattern. I don't recommend that you do it unless you really understand the mechanism of the pattern, but you can front run it. But this one did not move down to a level that I would consider worthy of a front run. If you're looking at this market from the perspective of it being more stuck in a range, no argument there. I would focus on the lower half of the range, and I would certainly have bullish bias. Again, so a lot of people ask me, what happens when a market goes into congestion or into consolidation? And what we want to remember is the assumption should always be, the high probability side of this market should always be continuation, right? And how do we look at continuation? Let me get my drawing tool here so I could show you what I mean. Okay, so this is what I'd be looking at. What was the trend that preceded the chop? Look at the trend down in here, green, green, green. This is what I call a double green market. And then the trend really convincingly broke in here. Well, I think a lot of traders, especially noobs, tend to believe that broken trends are downtrends, or I should say broken uptrends, then immediately become downtrends. That is not true. In fact, that's a lower probability assumption. And we were all noobs once. I'm not saying, what I'm saying is let's ditch the assumptions that are going to not lead us to where we want. And remember that you can shortcut experience by learning from folks who've already made the mistake. How do I know this? Because once upon a time, I looked at the market as an uptrend, downtrend conversation. And then once you start to study people like Charles Dow, you start to realize there are two sideways markets: distribution, which is what this market is in, and accumulation. And just presume that the trend that carried us higher into this chop is more likely going to continue than it would to reverse. Now, the strategies within this are different than a trending strategy. This is not a buy the dip environment. But I think that one of the easiest adjustments you can make to your analysis and to your outlook as a trader is to look at the preceding trend, the trend that preceded the chop, and focus on trading the market in that direction. All right. I think it'll spare you a lot of heartache and losses. All right. The high probability is always going to be continuation. Doesn't mean that's always going to continue, but the high probability. Right. So it always reminds you of that saying that they don't call it catching, they call it fishing. Yes. Same thing with trading. There's just a probability element to what we do. There's no certainties, of course. All right. ARK F. Sure. ARK F. Lot of COIN going into ARK, and I don't doubt that that Kathy Wood and company will be easing up on those COIN purchases anytime soon. So yeah, ARK F, not a trend at the moment, and not a market that's broken from this swing high. I also would not want to, at this point, short this market. I mean, gosh, no. This goes back to the previous conversation. Stick with the trend that was and focus on a new setup, some structure, focus on the lower end of the range, or focus on the breakout once the pattern confirms. But I do like ARK F to the long side. It's just a matter of which one of those strategies do you want to deploy? Do you want to wait for this continuation 1, 2, 3 to trigger? Or do you want to focus on, where's the drawing tool I'm looking for? All right, so I look at the lower half, perhaps. I look at some volume ledges for where the support could be kicking in. So there's a lot of ways to look at this. You can shorten the time frame. That would be yet another way to look at this market. So however you want to look at this, however you want to break this down, what I would focus on is this is not a trending market, but the trend that preceded the chop was up. So let's keep that bullish bias. All right, thanks for the question. What is my take on AEO? I was just looking at AEO the other day, last night actually, because it might still be up, because I was looking at the heavily weighted stocks within the XRT, and yeah, I'm interested in AEO, but I'm not anywhere near, unfortunately, a zone from which I could be bullish. I have some nice volume ledges in here, point of control waiting in here. But what I don't have is some kind of pullback. And why would I be looking for a pullback? Is it always waiting for some sort of move to the mean? No. And by the way, what's the mean to one person is not the mean to somebody else. It depends on the mean of what. I could look to the mean of, say, a volume weighted average price Z-score. That's something I call the V-score. I could look for the point of control. I could look to the 34 EMA wave. We could look at a Fibonacci retracement, maybe something as shallow as a 236 or a 382. I'm not saying that's where those are, but I'm saying you could look at this low, swing low to the swing high and say, okay, what would be a reasonable, if not slightly shallow retracement that I could engage in and call a dip, right? So dip buying would be relevant in a trend. And I think the thing that hurts a lot of traders is when they think about dips, but they're not thinking about what the precursor or the validity of a dip buy is, and that is the trend. All right. So great question. Thank you for AEO. Yeah, definitely something I'm keeping an eye on. Can the S&P continue at 3 forever? Larry, nothing is forever. That's for sure. I would not buy at the highs, right? If a market's moving higher, momentum traders like buying at the highs. If you buy at any kind of pullback, you're going to reduce your risk. So be patient with those pullbacks, and don't fight the Fed, gang. Look, I could talk about the intricacies of macro until I'm blue in the face and you guys are sick of hearing about it. However, here's the thing, and the GOAT, Stan Druckenmiller, talked about this. The main macro we all need to keep in mind, the main fuel in the tank of the bulls and buyers is the monetary policy of the Federal Reserve. It's almost as if nothing else matters, right? That's really it. That's really it. Are we going to talk about PE ratios and earnings per share and revenue? Those are incremental, but those are not macro. What we are looking at is how is the Federal Reserve stoking the fire of the equity markets while making it right now, which is what they've done with the very, very low rates, the only place we can go for a return. Carry trades and currencies are dead. I should know. I've been trading currencies for 20 years. Those carries, those percentage contrasts between two central banks, whoosh, very narrow. Where do we go for return? We've got to go to the equity markets when we're talking about, where the Federal Reserve is sort of funneling our attention and our capital. Yeah, there's someone behind me. Polly, yeah, it's my dog. Come here. Kara, come here. Come. Yeah, now she's interested in the cat's bed. Yeah, I'm dog sitting this morning. It's not an easy thing to dog sit a 1-year-old puppy. All right, hey, Kara, come here. Kara, come. Come here. I want to see your cute little face. Come here. I don't know if she can get into the camera or not. Come here. Come here. No, she won't. Sit. I won't do this tomorrow. That is for sure. Down. Okay. She's a love, though. All right. Next is, speaking of semis, would I mind looking at AMAT and LRCX? Oh, not at all. So let's take a look at AMAT. Now, I've got my eye on Intel. It's got so much proximity to earnings. It's a little problematic. But AMAT, one of the double greens within the SMH. And SMH doesn't have great structure, although it is trying to reorganize into a much more convincing uptrend. LRCX, again, nice looking trend, but now this goes back to how much of a retracement from a swing high to a swing low am I looking for? So here's my swing low, here's my swing high, right in there. And so then the question becomes, well, how much of a retracement? Am I looking for a move to a volume ledge? No. Am I looking for a move to the wave, the 34 EMA wave? Probably not. So what am I going to end up doing? I'll pull a last major move retracement on this. And again, one thing you can do is activate something a little bit more shallow, like a 236. All right, you can do something a little bit more shallow. There, that is right there. And so, I mean, if you're looking for any kind of pullback, to me, I would not even start the conversation until we hit a 236. To me, shallow would be a 236 Fibonacci and a 382 Fibonacci, right? Sit, girl, stay. So, good girl. So if I am, yes, I'm talking to my dog for those of you just tuning in. She's out of camera. I don't know, maybe I can get a shot of her before we wrap up. So I would definitely keep an eye on something more shallow in terms of the retracement, but I'm not necessarily going to prioritize this, but it's a double green bullish market. So the dip buy, the bullish bias is certainly valid in many ways. LRCX, AMAT, they are relative outperformers to not only the semi ETF, but to many of the other stocks within the SMH. All right. Okay. Next up is, let me catch up to these questions here. And sorry for jumping around. I think I missed this question. Mike, thanks for your patience. PYPL, sure. Can't say it's my favorite. When I think PYPL, usually in my head, I immediately think Square, Visa, MasterCard. MasterCard's the one I've got my eye on the most right now. So would I want to be long PYPL? Well, take a look at the trend. What have we talked about? Always focus on continuation, not reversal. When the market goes from double green, no, you're not going anywhere. When the market goes from double green to yellow, we want to look for that 1, 2, 3, and bam. So you can see we've taken that out. That continuation 1, 2, 3 triggered with a break of the swing high right in here. And so if we can go double green, this 1, 2, 3 could then lead into an uptrend. We're just not there yet, but I do like PYPL to the long side. It's just now within the context of bullish chop, how aggressive can I get? Well, the most aggressive I can get is focus on swing high to swing low and look for, one of those shallower Fibonacci retracements. Okay. All right, gang. So just like that, I am out of time as always. Thanks for all the questions. Sorry for the dog interruption, but she is a love. She absolutely is. I'm just babysitting this girl today. So as we go into the futures room, we're going to go ahead and take a look at the day trading for the morning. Head on over to your respective rooms, whether that be simpler futures, simpler options, or one of our masteries. And if you haven't checked any of those services out, please do take a trial. And we have an awesome $7 trial. And come on over and kick the tires and see if our community is right for you. I think you're going to find a lot of like minds here at Simpler. All right, gang. As always, thanks for your time. Be good to each other. I'll see you tomorrow. Sans the dog.